Jimmy.
Now what's worth doing is worth doing for money.
Straight from y'all street to Wall Street.
Anybody tells you money's the root of all evil doesn't make up path.
Dudes wake up, hope their girl turned on so they can get a little bit. Only woman in the morning I wanna turn on this Becky quick. While the average man looking at this act like she fine as it. I'm over here looking at tails and whips like 5-6. I left the mayhem for the market. Now I don't want a dope spot, I want a stock pick. I know that booty got dropped, triggered my stop losses, but I ain't got time for your wop. My V-wops crossing. Rich with hot V's and pushing hot strategy and plans to make grand. Still in my wife beater, Batman pajamas, house slides, and about 5 hot picks for the day. Cause I like the way the Dow bounces. 4 hot dips on call, so I got options. 2 with a lot of volume, 1 with a double bottle. Now I know dumb money don't understand. Am I talking about my trade or just thinking with my MACD? You see, we different in the way we move. You move with kittens and your dog, I move with bears and bulls. I got a green thumb, roll with the marijuana. Waking up with the fun, some commas. Jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and now I watch moves in the NASDAQ. Profits. Used to run from the ATF and them cops. Now I run down ETL, make profits. I jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. Yeah. See, me and Jim Cramer been talking mad money. Said today I'm taking a risk. They got the feds coming, but I got support here with me. I call a short squeeze. You get the drop, pull the trigger, and abort these. If she stay on my watch list, I might have to wife her. But I know better. I'm a true trading group lifer. Call up the Wolf of Weed Street. It's time to flip some profits. Go ahead, be hawking. Get your spot here. I'll double top that in the head and shoulders. Hit him up with this resistance. Watch him roll over. Cause I see John Wicks in contract. If I say I make $1 million a day, well, that's a large cap. You moving average, that's why you get crossed. Get split, get delisted, and knocked off. And I'm setting the whole block off. I'm buying GameStop and selling them roadblocks off. Jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs. Now I watch moves in the NASDAQ. Profits. Used to run from the ATF and them cops. Now I run down ETL. Hey, my family. Hey, go, what we doing, my man? Hey, make profits. Hey, Shug, Mike, what we doing? Hey, make profits. Yo, Wolf, Professor, what we doing? Hey, make profits. That TTG money gang, making profits. We some snipers.
Hey, yo, what's up, everybody? What's going on, folks? Welcome to the True Trading Group live stream. Guys, my name is Michael Edward Parinati. I go by Michael Edward. I'm the co-founder and head trader of True Trading Group. In case you didn't know, we were a Benzinga FinTech Awards finalist for Best Data Analysis Tool last year. We're coming for the award this year, though. And we are also the fastest growing and highest rated premium online education platform that combines university level trading and investing courses with premium stock market tools, live workshops, individual mentorship and coaching for stocks, options, crypto, and futures. We day trade, we swing trade, we also cover long-term investing. There's literally something for everybody here at True Trading Group. Now, you guys join True Trading Group, getting access to around $15,000 worth of education tools and resources that have helped thousands of teaching members to make money and become better traders and investors, no matter how much time they have, how much experience they have, or how much money that it is that they're starting with. When you guys join TTG, you're getting access to our entire university level curriculum. It is a simplified and expanded upon version of the training that I received working at a fund in New York. It's our stock market foundation course, chart patterns, technical indicators, short selling, swing trading, advanced options, trading during market crashes, futures trading, options trading, crypto, a tax course, trader psychology, getting started TTG 101 so you guys can use and understand and maximize the full benefits of the TTG platform. You get access to all of our professional moderators. There's 8 professional traders with you each and every single day. A variety of different trading styles: swing trading, day trading, options, futures, scalping, and also long-term investing and core trading. You guys have access to all of it when you guys join. All of our tools and technology, Trading Views premium charting software, real-time data from Quote Media, Benzinga Pro's real-time news feed, a simulator from ETNA, CBOE's data, which unusual options activity, dark pool data, and options flow, customized scanners, of course, our AI trading and investing assistant, which is we're coming for the Benzinga FinTech Award based on that AI tool. I'm telling you guys this. I'm calling it now. I'm calling it now. We're coming for it for 2024. And of course, our supportive community, 10,000 members from 115 different countries, all of our chat rooms, all of our trading forums, our blog. We also have a real-time translation for seamless communication on our platform, so you guys can communicate in whatever language it is that is your language. We have members in 115 different countries, so that translation is very important for a lot of our members where English is not their first language. They can talk, or they can type in their language, and it will send it in. Other viewers will read it with whatever their setting is. You can talk in Spanish, somebody else can read it in French, and so on and so forth. All right, you get access to our video library, which got a bunch of different 1,000 hours worth of videos covering different topics like how to trade with a full-time job, how to grow a small account, how to avoid FOMO, build confidence, stay in winning trades longer, and so much more. Right? Of course, transparency is key with us in True Trading Group. We're fully transparent. We are an open book. We have daily submissions of our trading records from the brokerage accounts from all of our professional traders that have a cumulative win rate on all of their executions of just around 80% now, going on roughly the last 4 years. We're also 5.7 star rated out of 5 on Trustpilot with over 2,500 reviews over the last 5 years. 78% retention rate amongst our members and a 2.5% refund rate. All right. So welcome all of you that are joining us here on this live stream. If you guys are wondering why you should listen to anything it is that I discuss on this live stream and on this channel, it's because I didn't figure this stuff out on my own. I began my career working at T3 Alpha Fund in New York City, my first job out of college. They had me go through this training program before they let me touch $1 of the fund's money. Then 2008 happened. That was the Great Recession, the big stock market crash for the same year that I received one of the firm's Trader of the Year awards. Now I'm the head trader and co-founder of True Trading Group, along with my 8 professional trading mods and an over 30-person staff. We've helped thousands of members to reach their goals. All right, so if you're ready to learn trading and profit for real, you've all come to the right place. 6 nights a week, Sunday through Friday. We go live on this channel, myself, other mods, and special guests. We'll drop golden nuggets, give you free lessons, education, and trade ideas to help you all become better traders. So welcome. Well, folks, today's a pretty interesting day because basically every company that's reporting earnings is getting the absolute crap kicked out of it. Just an absolute destruction of earnings all across the board. Except for one name that's actually in my long-term portfolio. It's Pure Storage, PSTG. PSTG. This one's actually doing really, really well. I like Pure Storage. I like Pure Storage a lot. I've owned this for a few years now. It is making new all-time highs. But I also do own Salesforce though, and Salesforce is down 16.5%. Now, I own Salesforce from like 150, but the stock is still stock is down 17% now, down to 225. So this thing is getting the absolute crap kicked out of it right now after its earnings. You also have Octa that's getting hit here pretty hard. UiPath is absolutely disgusting, down 33% for UiPath. You also have here Agilent Technologies. I still don't even know if I'm pronouncing that right. Agilent. I don't even know how to pronounce that. They're down 15%. I mean, you look across the board and just everyone's getting the crap kicked out of it after earnings. So we're going to talk about this, guys. We're going to go through. I want to go over some of these earnings with you, give you some analysis on why these stocks are down. Which ones do I think are maybe worth a buy versus which ones I would stay far, far, far away from. And we'll go over some of those earnings. The first one we'll talk about is going to be Salesforce, because Salesforce is probably the most recognized name. It's probably the most well-known name out of all the earnings that are out here this afternoon. And what you have here is a miss on sales. Okay, 9.13 billion versus 9.147 billion expectations. They did beat on earnings per share, but here's the issue. The company has just issued their slowest growth estimate ever. Single-digit growth for their guidance. It is the first time this company has issued single-digit growth on their guidance, and that is why the stock is getting the crap kicked out of it right now, down 17%. Okay, they see Q2 earnings per share guidance, 234 to 236. That's against $2.40 estimate. And their revenue is also light, 9.2 to 9.25 billion. Analyst expectations were 9.34 billion. So their guidance came in light, top and bottom line. Their growth came in as the lowest number ever. And you're seeing that revenue miss. So you got to think of it this way. They missed on revenue and sales for the quarter. They beat on earnings per share for the quarter. But their guidance for sales was a miss. Their guidance for earnings per share was a miss. And their growth is looking at a single-digit growth for the first time since they have been a public company. That's why you're getting the crap kicked out of it. Okay? Now, let's talk about which one of these stocks do we think is actually viable. I do think that Salesforce is viable. So for me, from a long-term perspective, there is a support zone around 195 to 200 that I think is a pretty decent spot, that if you don't own Salesforce and you would like to in the long-term portfolio, I think it's perfectly fine to do so. And then you have the massive support level, which is down here, which is the double bottom from 2018, 2019. And that's kind of where you kind of found the bottom also at the end of 2022. I don't necessarily think that the stock gets all the way back down to here. But if it did, I would say that's another spot that I would like for the long-term portfolio add. They have a very clear and obvious double top that is now put in place on the daily chart, and you can expect this stock to stay underneath this level for quite some time now. And now that you're putting in a well-established double top with their horrible earnings release, that's going to keep that buying pressure out of the name for a little while. I don't expect this stock to get back to 315 for a long time. All right, but now I would say support levels, I like this 195. If you don't own it and you want to, I think that's a decent spot to take a nibble. And if the stock goes lower than that, you can target then in the mid 100s later on down the road. If you get a sizable pullback in the overall markets, those are spots that I think Salesforce becomes viable in the long-term portfolio. Now, I own Salesforce in the long-term portfolio. I bought it right there in the 150s, 157 or 158, something like that. So I'm still up nicely on the position even after the 70% drop. I'm not adding to it right now, but I might consider an add if we get down into the 190s. All right. So that is Salesforce. All right. That's Salesforce. Probably the most recognized name out of the ones that are getting beaten up and that are getting hit today. The other one that I want to talk to you guys about is UiPath. This is as disgusting of a reaction to earnings as you guys could really, really see, right? They missed on everything. They are seeing, they're not even close, okay, to the guidance that was issued. And the CEO is stepping down from the company. So it doesn't really get any worse than that. It could get worse than this, but this is why the stock's down 33%. This is a company, this is a stock that is a no touch for me. I don't own this name. I don't want to own it. I don't have any plans on owning it. You are coming up to support at $10, $11, but I don't think that $10, $11 mark is enough to get me to buy this name. This to me is a hands-off. Salesforce is not. I think Salesforce is viable once you get into those zones. This is a name I have no intention on buying on this drop. Could you get a dead cat bounce off of $11 or so? Sure. But I think that in the next couple of months, maybe next year, within the next year or so, I do think you're seeing this stock trade sub $10, and I think it's in the single digits. So this is a no touch for me. Their guidance for the next quarter comes in at $300 to $305 million. Analyst expectations were $342 million. That's a big miss. You're talking about more than a 10% miss. Then you have full year 25 revenue guidance, $1.4 billion to $1.41. Analyst expectations were $1.56 billion. So it's a miss on earnings per share. It's a miss on revenue. And they're not just slight misses. They're sizable misses. The CEO is stepping down and leaving the company. That's also not a good sign. Stock's down 33% on the back of it. I have no intention on trying to buy this in front of the all-time low. That all-time low for the stock sits around $10.50. So again, no intentions on buying Path. All right, no intentions on buying Path. Unity Software, this company did not come out with earnings, but I think they're coming up here this week. This is just another one that I've been getting a lot of questions about, and this is not a good-looking stock chart. Okay, this is not a good-looking stock chart right now. You've taken out your all-time lows at $22. You've really extended this down to now 18. So you've broken that level and you've extended and cleared it out. Bounces back into the low 20s, I think, are shortable. They've got earnings coming out soon also, but that's going to be something that we will keep an eye on for Unity Software back up against 22 for possible shorts against that level. Octa is another company that came out with earnings. This one's doing much better. It's flat after a wild roller coaster ride. Earnings came out. It shot to 102. Then it dropped to 87. Then it went back to 102. Then it went to 103. Then back to 87. Now back to 96. This is as wild of a roller coaster ride as you guys will see on an earnings name. So let's talk about why, and let's go over those numbers for Octa. Octa earnings per share were a beat, 65 cents versus 55 cents. Sales were also a beat, 617 million versus 604 million. Q2 revenue is expected for them to come in at 631 to 633 million. Analyst expectations were 616 million. Earnings per share 60 to 61 cents. Expectations 54 cents. They raised their full year 25 revenue outlook from 2.495 billion to 2.53 to 2.54 billion. Analysts were expecting 2.51 billion, and earnings per share 224, 229. They raised it to 235 to 240. Analysts were expecting 232. So that's a revenue beat, earnings per share beat, and they raised guidance, right? And they raised guidance. I'm just going through a couple of other things here. Reading some comments here from the CEO. If there's anything notable. All right, they got the conference call at 5 o'clock. So they got a conference call coming up there at 5 o'clock, but a pretty good earnings release. All right, CEO highlighting a massive opportunity ahead in their earnings release. That's a wild. I'm not sure why there was that much volatility on Octa off those earnings. Those are pretty good earnings, but I will tell you this. I like the support level that just held in the high 80s to 90. Now, if you take a look at this Octa, right? Look at all that resistance right there in 2023. You gapped above it with their last earnings release. Then you pulled back into it and you tested it right there in April, and it was a level of support. Wow, that's actually really nice. So Octa is not a stock that I usually look at, but as I'm looking at this chart, I'm just sitting here like, wow, that was a really great trading opportunity because that was such a huge level that when you drop back into it, this is a swing trading. This for swing traders, that's a buy all day long back against that level with stops underneath 90, maybe a stop at like 88. And this thing just absolutely ripped face from there. We're all the way back to 104 from the $90, but that could have been a really nice swing trade. Wow. But anyway, you drop down into that zone here with earnings, and you can see we're trying to hold above it. You got to just be careful here with the earnings. You got to be careful here with the conference call. That's going to be coming out there in 3 minutes. So in 3 minutes, the conference call, we'll see what the company CEO, CFO, we'll see what they have to say, and if that's going to move the stock in a big way. But I like that $90 level. Let's see if we stay above it after the conference call. All right. And then Pure Storage. Let's talk about this one. This is a company that not many people know about. This is a company that not many people know about. I own this thing from like in the 20s. It's not a huge position, but I do own it. So just, full disclosure on, I do own this name in the long-term portfolio. It's not a massive position. It's not a Microsoft or an NVIDIA or anything like that, but it's still there and it's doing really, really, really well. I like what I've seen from this company a lot. Their last couple of earnings releases have been pretty good. They had one hiccup there at the end of 2023, but it very quickly recovered. So you had a gap down after earnings, the end of 23, but immediately recovered, which made me feel pretty good about, investors liking the future of the company. And the next earnings release after that was this huge breakout to all-time highs. Now you got another earnings release, another breakout to all-time highs. So I do like this Pure Storage. Let's go over the numbers. Earnings per share were 32 cents. That's a beat against 21 cents. Sales were also a beat, 693.5 million versus 681 million was expected. They see full year 25 revenue of 3.1 billion versus 3.127 billion was expected. Okay. which is interesting to see the stock still up 8.5%, even though they came in light on their full year guidance for 2025. But their second quarter, their next quarter guidance is 755 million versus analyst expectations of 750 million. So it's interesting to see a higher guide for the next quarter, but a lower guide for the full year. Okay. So interesting to see that the stock, though, is still up 8.5% on the back of that, right? Kind of interesting to see that. Interesting to see that. Nice. Way to go, J Trades. You own this in the long term at 51. Nice. Yeah, I like this. I do like Pure Storage. I have no intention on selling it, especially not right now. Stock looks great. Chart looks great. We're going to stay with this one for some years. All right. If you don't own it and you want to, I would target like the mid to high 50s. Anywhere from, let's say, 54 to 58, I think is a nice little spot. And then, of course, like 49 is a big spot. If you were to get back to those, I mean, obviously the stock's at 68 right now. Not a stock that I would consider buying right now at this moment, but on pullbacks towards maybe the mid to high 50s. You want to take a stab at it, you could. You add more around 49.50 if it gets there. And I think that's a nice little way to build positions on that. Cava, right? Cava. I've been a pretty outspoken bull on Cava for the last couple months, and they came out with earnings yesterday, and a wild reaction in the overall market from it. This stock was down around 10% today, and it has recovered to now be up 6%, which is extremely impressive. What I think is interesting is that this support level that you see right here in the mid 70s held beautifully. So you see this used to be a level of resistance. You got above it, and then that area was support for us, right? You dropped into it today and it held and just reversed and just absolutely ripped face. It's a very high volume day for the stock today following the earnings. I like Cava for the long term, guys. Okay, I really, really do. It is, for those that don't know what Cava is, and some of you may not because they don't have locations nationwide yet. They're predominantly an East Coast chain. They have some locations in Southern California. They've got a couple locations in the Midwest, but they're predominantly an East Coast brand. They don't have any locations in the Northwest, or all the way up in the north, like the North Central. They don't have any locations there. Predominantly an East Coast brand, all the way from New York metropolitan area all the way down to Florida is really their sweet spot. What it is essentially it's Chipotle. Okay, it's Chipotle, but with Mediterranean food instead of tacos and burritos, it's Mediterranean food, right? It's like lamb and gyro stuff, and it's more Mediterranean food than it is. Not more, it is Mediterranean food. It's not Mexican food. And it is delicious. Now, when you walk inside of a Cava, if I covered the Cava brand and the Cava logos, you would think you were in a Chipotle. It is the exact same setup as a Chipotle, right? The line against the wall, you get to the counter, you start with the first person. What do you want? You want a bowl, or do you want the wrap or a salad? And then you go from one person to the next down the line, and you add your meats and your rices and your vegetables, your sauces, et cetera, until you get to the end of the line, and then there's the cashier, right? It's the exact same setup. And then the condiments are over there off to the side. Exact same setup as Chipotle. Now, what has Chipotle taught us? Well, we take a look at Chipotle, right? We take a look at Chipotle's chart. I think it's safe to say that the Chipotle business model, that fast casual, I think it's safe to say that it works. Okay. I think it's safe to say that it works. So it's not a matter of, does the business model work? We know the business model works. If Cava were to fail, it's certainly not because their business model is flawed. Their business model is mirrored off of Chipotle. They just changed the type of food that is used. Now, they currently have just over 300 locations in the country, 323, I believe. Their focus over the next year and through 2025 is expansions. Okay? Is expansion, adding new stores. Now, adding new stores means what? Means investment. It means increased costs and expenses. Okay? So I'd be fully prepared if the stock were to pull back over the next couple of quarters because of increased expenses, increased costs, and increased investment because of their expansion plans. That is a buying opportunity in my book, because the stock could pull back just because investors don't like the very short term of this big investment. If the economy is slowing, they're increasing their costs and their expenses, but you need to do that in order to increase revenue in the future. The only way you're going to increase revenue is, well, A, get more customers, but I don't even know if they can get more customers. Every time I go to a Cava, the line is out the door, right? So I don't know how many more customers they're going to be able to get to these locations. It's really now it's all about opening more locations so they can increase their margin, they can increase their revenue and increase their profitability, right? Increase their profits. So I want the stock to pull back because they're investing to expand locations. Because if that does happen, that is the buying opportunity. And then you hold the stock for the next several years. Because listen, does the company have potential to become the next Chipotle? I don't know. That's a huge claim. Look at what Chipotle stock has done. It's a $3,000 stock that went public at 50, right? It went public at $50 in 2006. Now in 2024, it's $3,000. Does Cava have that type of potential? Maybe. But that's going to take a really long time for it to play itself out, right? I mean, you're talking that's almost 2 decades of growth. Well, I think that over the next decade, Cava could experience tremendous growth as they open more locations. I've never talked to anybody that ate at Cava and was like, man, this was terrible. This was trash. I'm never coming back here. Everyone I talk to says, wow, that was fantastic. I love it. I'm going to get it again. So there's nothing that I don't like about the company. The stock is expensive. Their PE ratio is actually very high right now. So that is a little concerning about the stock being a bit extended and a bit expensive and overvalued at this moment. So let's see if there's pullbacks in the future. I think spots to buy this stock in the long-term portfolio is the low 60s, 1,000%. If I see the low 160s on this name in the future, I'll definitely be a buyer. I'll definitely be a buyer of Cava if we were to see a pullback into the low 60s, maybe on a slowdown with the consumer or on, fears or worries about investment and increased costs on expansion. I'm a buyer. I'll be a buyer of Cava at that time. Okay, I'll be a buyer of Cava at that time. Techno Thomason says, hi, how much is a realistic profit per month? 1 to 2%. So Techno Thomason, I hate questions like that. I do, because it depends on how you trade, right? Like 1 to 2%. Are you trading options? Are you trading equities? Are you trading futures? Because the leverage on those products is going to be entirely different based on the size of your account and the percentage gains that you can make. It also has a lot to do with the risk that you're willing to take. Are you willing to take larger amounts of risk with your account? Are you someone that has a really small account and then when you enter a position, you're in 20, 30, 40, 50% of your entire account value? Or do you have a large account? You're only using a very small percentage of your capital. All of those things are going to affect what your monthly percentage gain could be. Is 1 to 2% realistic? Absolutely. It's realistic and it is possible, but it's just not fair. And it's extremely misleading for anybody to ever say, yes, everybody should make 2% on their entire account per month. You'll never hear me say anything like that. It's all relative to what your account size is. It's all relative to what instrument you're trading because of the leverage that comes with different instruments, meaning futures, options, or equities. And it depends on what your risk tolerance is and how much risk you're willing to take. What I will tell you is, yes, it's possible. But the most important thing that I think you really should focus on is not necessarily just some number that you're going to pull out of the air and say, I want to make 1% to 2% of my account a month. What matters most is that are members of True Trading Group actually making money, period. Because that's honestly what really matters, right? Techno, that's why you're here. You're interested about, making money in the market. You're interested about learning. You want to trade. You want to, supplement your income, or you want to replace your income, whatever it is. What's most important is that our members actually making money, okay? On stock, hedge funds rarely beat the S&P, 7 to 10% average yearly gain over the long term. Oh, man. Dude, a successful trader will make way more than 7 to 10% on their account throughout the course of the year. A successful trader does that in a month. A successful trader can do that in a month. You're talking about hedge fund performance. You can't compare hedge fund performance to an individual day trader. You can't, not even close, because it's entirely different. I used to work at a hedge fund. Hedge funds cannot be long one day and short the next. They're too large. Their positions are too large. A hedge fund will just sit in a position, right? I can go long Meta, tomorrow and short Meta the next day. I can go long Tesla one day and short Meta the next. I could be long AMD one week and short AMD the next. A hedge fund can't do that. The hedge fund will have core long positions. Well, depends on what their mandate is. Depends on what the fund is trying to do. There's a lot of different types of hedge funds. There's long only hedge funds. There's neutral long short equity funds. There's a lot of different type of investment styles that hedge funds will implement. Okay, so it really depends. Some hedge funds won't short stocks at all. They're only long. Well, if the market crashes, right, then that hedge fund, the only way for them to outperform the market is just by trying to be in stocks that go down less than the overall market does. And you're going to have these situations where hedge funds originally were created because of, it's all in the name, hedge funds. Hedge means they were supposed to put themselves in positions that would hedge risk of overall broad market exposure. That's what they were originally really supposed to do. They have since grown into an entirely different industry that takes on more risk than broader market exposure, depending on the hedge fund that you would be invested in. But some hedge funds, you're talking about an average. Like you said, on average, hedge funds make 7 to 10%. Yeah, sure, on average, but you're adding thousands of hedge funds' performance together. One hedge fund might make 44% in a year. Another hedge fund might lose 18% in a year. You're just picking an average, and it's an average across thousands of funds all over the world. So just to say that statement, the average hedge fund doesn't beat the S&P, it's not a fair statement to say. Yes, on average, true, but there's some hedge funds that destroy the S&P. There's other hedge funds that completely miss the S&P. As an individual trader, you are at an advantage actually because of your flexibility and of your elusiveness. Like, we can be long one day and short the next. Hedge funds can't do that. So you can be building a long position, and when the stock goes down one day, you're going to be down. Your P&L will be down on that day, but you're building a position. So you're going to actually be buying the stock when the stock is down. Meanwhile, as an individual trader, if I think that Tesla's going to go down, I can short the stock. I can buy put options. I'll make money on the way down. While the hedge fund is not making money on the way down unless they actually have a short position on the stock. But hedge funds will not be overall net these massive short positions. They usually use short positions to hedge other longs and to hedge exposure in the overall market. It's very rare that you're going to find a hedge fund that has overall net like short exposure in all of their assets under management. So if a hedge fund managed $500 billion, you're really never going to find a situation where the hedge fund has 300 billion of that short. Unless you go back to Michael Burry, who was nuts and he bet his entire hedge fund on the crash of the markets in 2008 and ended up working. He almost bankrupted his entire fund. He was probably a month or so, 2 months away from going bankrupt because he was losing over $1 million every single day on his short position. And then finally the market's cracked and he made all that money back and then profited like $1 billion on the trade back in 2008. But he was about a year early. He put that short position on about a year early and was losing about $1 million every single day that he was carrying that position because of the credit swaps that he had purchased. So that's another story for a different time. But what matters most, and I'll get back to what I was saying, right, Techno, is what matters most is that members of True Trading Group are making money, whether it's 1%, 2%, 7%, 10%, 20% a month, whatever it is that they're making money. And I'll just show you guys right now. Anyone that's on this live that's not a member, watch this real quick. Pay attention. Members of TTG that are with me right now, do me a favor, type the number 1 if you're making money and you're becoming a better trader because of TTG. Just go ahead and type the number 1 inside of chat right now. Again, members, just type the number 1. Okay, type the number 1. If you guys are making money and you're becoming better traders because of TTG. So go ahead and sound off in chat, type the number 1. And those of you that are not members, pay attention. Pay attention to what members are saying. Pay attention to what, these are your friends, your family members, your coworkers. These are your peers, right? These are people that are in your shoes. They used to watch me on YouTube. Now they're members. Now they're making money. They're telling you so. Don't believe me because I say it. Believe them because they say it. There you go. Dessa says, I'm up 40% year to date. So Techno, there's your answer, right? Dessa is up 40% year to date on their account. All right. So there you guys go. And guys, listen up. Honestly, anyone that's on here that's not a member of True Trading Group, okay, those of you that are not members of TTG, do yourselves a favor. Just go ahead and join our trial membership. It's a big week this week. We haven't even gotten into the potatoes of the week yet. You've got GDP revisions tomorrow, jobless claims tomorrow, PCE inflation data Friday. Things are going to really start. And then next week, forget about it because then you're going to start to get the CPI data for May. So you're going to blink and then CPI data comes out for the month of May. And that's going to be a huge, huge catalyst for the overall markets. You have the Fed meeting that's coming up in the month of June. Things are about to get real crazy here in the markets. Okay. So do yourself a favor, join our trial membership. Okay. You can trade with us for 7 days. Okay. If you trade with us for 7 days for a one-time payment of $3, it's 7 trading days. It's not 7 calendar days. It's 7 trading days. So you guys will be able to trade with us for 7 days. Go to TTGTHREE.com. That's TTG3 spelled out.com. TTG3 spelled out THREE.com. Enter your name, email, phone number, click yes, I want this, fill out the form, pay $3, join us. Now, why do we charge $3? We maintain a very high quality chat room during the day. There's thousands of people on our platform with one goal, to make money. I will not tolerate someone jeopardizing the quality and the integrity of that chat room by coming in there, spamming, being disruptive and distracting. So by charging you $3, it ensures that you're a real person. You actually are putting your credit card information in. So it tells us you're serious about this. If you're serious about this, we're serious about having you. It is a one-time payment of $3. There is no automatic renewal. There's no reoccurring fee. There's no automatic upgrade to a full membership in case you forget to cancel your trial. I don't want you to become a member of True Trading Group because you forgot to cancel a trial. We're not going to play games like that. No funny business. After your trial is over, it just expires. You never charge anything again. You personally need to manually upgrade your membership if you want to. It doesn't happen by itself. It's a one-time payment of $3. This cost me more than $3 today at Starbucks. So it'll be the best $3 you guys have ever spent in your life. Trade with myself, the 8 professional traders that are with you each and every single day. Get all of our real-time trade alerts, get access to some of our amazing trading tools that are on the platform, and experience what it's like to be part of TTG. Another big day inside of chat today. It was swing trade galore. Okay. A lot of profit taking today coming off of some swing trades to the short side today. Caterpillar was a big one. Affirm was a big one. These were some trades that were made throughout the last couple of days that were exited there today and taken profit on today. 2 of them over 100% gain today to the downside. These are some trades that were executed by one of our pro trading mods, Shai, who is now a full-time trader, used to be an IT professional, quit her job at the IT professional now to pursue a full-time trading career. and actually turned down another six-figure job offer and is now a full-time trader and a moderator at True Trading Group. Some beautiful trades there today to the downside coming off the table. You're getting further downside right now in the after-hours session. So some of those stocks are trading even lower right now. Looks like we're setting up here for potential gap down tomorrow into some key support levels. We'll have to see where we open up tomorrow morning. But as always, myself and the mods will be with you in the morning, will be with you in the afternoon. We're not gone after an hour or so when you're left to fend for yourself. The mods and I are with you from pre-market all the way through into the close. All you got to do is go to ttgthree.com. That's TTG3 spelled out.com. Enter your name, email, phone number. Click yes, I want this filled out the form. Pay $3 and then get your butts in chat. All right. So there you guys have it, folks. There we have it. All right. Join that trial, but the best damn $3 you ever spent in your life. Now, here's what we want to talk about before we go. I'll give you guys a quick analysis rundown on the SPY because we are coming up to a major level. Major level. You can see here previous resistance. We gapped above that when you had the lighter than expected CPI number. Let's go back to the charts. Let's go back full screen to the charts. So here you guys can see previous resistance at the previous all-time high. We gapped up on the lighter than expected CPI number. Then you have this big flush out candle, this big bearish engulfing candle. You bounce, and now it looks like we're heading to the downside. I think you're going to get downside here on the SPY. I think we're going to break under 520 by next week, and I think we're going to work our way down into this 50-day moving average and get into the 5 teens. I think this is where that we are headed. I don't think that we're going to do this. Okay, I think that we are headed to the downside. The price action that we see right now is very, 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 very similar to the price action that we saw back here in the end of March. The end of March, I'll just show you, you had an all-time high that was taken out. We made new all-time highs. We then consolidated for about a week and a half to 2 weeks. Then you had a bearish engulfing flush out candle, right? Then you bounced for the couple days after that, and then you pulled back. Well, we just broke out to all-time highs. We consolidated for about a week and a half. You had the big bearish engulfing flush out candle. You bounced a couple days following that. And now I think it's time for a meaningful pullback. So my target on this pullback is actually right down in this range. I think this is where we're headed over the next couple of days. I'll be ready with some shorts if and when that happens. If you gap down tomorrow underneath 523, we're going to use 524 as resistance, and we're going to try to catch a move to the downside. But that's if and only if you gap under the level tomorrow morning. We'll have to take a look and see what the markets are doing in the pre-market session. Obviously, a lot can change between now and 9:30 tomorrow morning, but I'm just letting you guys know if that happens, I'll be looking short for tomorrow. Some big catalysts coming up: GDP, jobless claims, PCE inflation data. The next 2 days, that data is going to move these markets. Yields are currently moving to the upside. That means bonds are going down, yields are going up. The markets don't like it when bond yields really start to push. The 2-year treasury is back at 5%. If the 10-year treasury starts climbing closer to 5%, right now we're 4.6, 4.7. If the 10-year gets 4.8, 4.95, this market goes down. If the 10-year gets to 5%, this market goes down. So you got to watch those yields. You got a lot of bond auctions over the last couple of days. The bond auctions were not good. Investors that were buying those government bonds were requiring higher interest rates to take that debt down, and that pushed bond yields up and it pushed bond prices down. Okay, so that had a lot to do with why we've seen bond prices go down, which means the bond yield goes up. Directly inverse relationship there between the price of a bond and the yield that the bond provides. So we've seen this rise in yields lately. If that continues, I think you're going to get pressure on the equity markets, and that pullback into the 5 teens, I think, is well within reach over the next couple of days. Don't trade it on your own. Go to ttgthree.com. Join us for 7 days. Trade with us. Take some of the moderators' trades. Follow along. See how you guys can do 7 days with us full time. Listen, not 7 calendar days. The weekend does not count. Saturday, Sunday do not count against your 7 days. And if you join today, your day 1 starts tomorrow. So you have Thursday is day 1 for you. Friday is day 2 for you. Then Monday is day 3 for you. Okay. So join us. Come make some money. See what TTG is all about. That's TTGTHREE.com. Thanks for tuning in tonight, folks. If you have not yet done so, smash that like button and show some love. Subscribe to the channel. Turn on your notifications.